Good morning, everyone. My name is FADI REYAD. I am the Chief Market Analyst, and I am from CAPEX.com. So basically today, I came to you. We're gonna stay with each other for some time. So the topic I'm going to speak about today, it's the economic cycle. So what are we going to speak about? M&Ms. If anyone knows what is that, like M&Ms, Galaxy, Bounty, those kind of stuff, GDP, balance of payments, economic cycle, central banks, inflations, and how to survive. All right. So the point is here, I have a podcast in CAPEX.com. It's called The Market Experts by CAPEX.com. And in this podcast, we have a weekly thing. And I keep saying one thing continuously, non-stop. The improvement, the knowledge that you gain, any knowledge that you gain in this industry is the most important thing. It's the key to successful, all right? So if you want to do anything, if you want to improve, if you want to have a better trading journey or investing journey, so the most important thing is to, keep improving yourself, knowledge. So the knowledge is the most important thing. Why? Because without knowledge, you will be, doing the same mistakes and, repeating the same, falling in the same traps all over again. So that's why I picked this topic, because going back to the podcasting, because I keep every week telling you and telling everyone about just one new information that could be useful for them, just to keep them in mind, where it can help them to, to change some trading behavior that they have, or maybe, hopefully, they can add up every week to their existing informations. So let's start and let's see how it goes. M&Ms. So it's the microeconomics and macroeconomics. Again, why micro and macro? Most of us, I think all of us, we know what is the micro and macro. But the point is here, again, especially if you are a beginner, you're intermediate, even if you are sophisticated, the point is you always need to pay attention to what's happening around you in the, economy, and therefore you can, after that, make your decision based on that. So the microeconomics, just to remind you, the micro, it's the small things, the small activities that happens in the economy, such as that the individual activities, such as like the company's activities. So basically, the microeconomics, it take care about the data that that is related to the small picture. Let's put it that way. As for the macroeconomics, it do represent the bigger picture in the economy, and the bigger picture, it can be the GDP, the interest rates, etc. And speaking about the GDP, so the GDP, it's the market value of goods and services produced. So anyways, every now and then we see on the data that comes out, which is the GDP. And that data moves the market. So why do you need, as a trader or as an investor, just to sit there and wait for the data of the GDP to come out and then try to, all right, this is moving the market, but I'm not taking any benefit because of that. And that's why I do insist that's the most important thing, is to, to have the knowledge, to have the enough understanding of what is the GDP itself. Therefore, I'm always a reminder. That's exactly what I keep saying. Reminder, all right, this is one of the elements, this is one of the important elements that we should keep in mind. GDP, let's go through a breakdown of the GDP. So it's C plus I plus G plus X minus M, which is the C, consumption, plus investment. So the understanding of the components, what is the GDP that comes every quarter for any economy, whether the US, the UK, and the EU. So I is the investment, G is the government spending, and lastly, it's the exports and the imports. So all of these components, we always should, be aware of what is the GDP is made of, what is the breakdown of that, and how every component of the GDP equation that have, it's important for us in some way. So if we don't pay, well, basically now, because we are living in a very complicated economic cycle and very complicated kind of, monetary policy that is being taken by the central banks. Therefore, so understanding what is the situation that is happening is very important. All right, why Jeremy Powell all of a sudden he decided to start increasing the interest rates since March, beginning of 2022? Why everyone now in the the ECB, European Central Bank, they decided to increase the interest rates? Why? So basically, instead of just waiting and trying to figure out what they are doing, we can always keep in mind, that's why I said, always keep in mind that the knowledge about any of these topics is the key to success again. Up next, balance of payments. Well, basically we're going to have a breakdown. So balance of payments, trade balance. It's the imports minus the exports. Well, I do see this almost every month. It's a data that, again, it moves the market. What is the trade balance? So trade balance for any economy, it's the imports minus the exports. So higher imports, well, this is the explanation. This is the reading of the data that we see every week or like every month again, it moves the market, and it's one of the important things. So the higher imports, well, we have a deficit. And if we are having a higher exports, then we are having a surplus. So basically, the exports are more than the imports. And that gives you a reflection of how the economy is going on. So basically, I am a guy who is interested in the US stock market. Then I do have to understand and I do have to be aware of every element that is happening within the US economy. So that's one of the things that we should look at. Another thing is, on the other hand, trade balance comes with the government budget. What is the government budget? Revenue, which is basically the taxes, minus the expenditure. Higher expenditure, it's a deficit again. So if the government is spending more than it's having the revenues, then there is a deficit. Higher revenue, it's a surplus. So again, this is one of the things that we should be aware of. Trade balance and government budget, because if I want to understand how the economy, if I want to analyze how the economy is doing at a certain stage, then I do have to be aware of what is the trade balance and government budget is doing for the economy at the moment. Economic cycle breakdown. Well, I do see everywhere posting this picture and asking the everyone who is following that certain page, just one question: where do you think we are at the moment? So basically, again, it's the most important is just to be aware of what is what we are having here, what is the economic cycle is made of, and trying to understand, because you can't be making your decisions when we are having the boom, for example, at boom economic cycle, the same as when we are having the recession. So you should be able to determine where we at the moment when it comes to any economy, and based on that, the trading or investing behavior, it does indeed change with every step of the economic economic cycle. The two things I picked for you when it comes here is, here you go, recession and overheating. So the recession that is keep repeating now in most of the in most of the news, that recession fears based on JP Morgan, Goldman Sachs, Bank of America. We're expecting to have a recession in Europe, to be very specific, by the end of this year, maybe till 2023. Bank of England is warning about again falling into a recession, into a deep recession. The United States, we do have a technical recession, which is, according to Jeremy Powell, it's not happening, but we do have a technical recession. What is the recession? We have negative growth for 2 consecutive quarters. This is what did happen now, but still, that's what's the biggest fear that is happening in the market. And as for someone, let's say a beginner in the market who is trying to start his journey in trading or investing, to enter into a recession fear kind of a stage, and he's not even aware of what is the recession is about, then that's one of the biggest mistakes that you can do. Another thing is the overheating. This is the most two interesting stages for me. The stage between boom and deceleration. This is the overheating. Is the economy overheating? I do believe that the overheating stage is a bit behind us at the moment, and now we are trying to get out of the overheating stage. But again, why do I come up with these kind of, okay, what is the recession, what is the overheating? Because if I don't have the knowledge and I don't have the understanding of what's happening in the economy and what's happening around us and what is the biggest fears that we're having, then how can I make my decisions based on that? Just ask yourself a simple question. Can we have the same trading behavior when we are having a quantitative easing policy from the central bank? It's the same as when we are having a recession fears. I do believe it's not the same. Speaking about the central banks, so we having here the central bank policies, and the first one is credit creation. So it's increase how the central banks they create any they do or they invent the credit creation. So basically, it's increasing the supply of money through extending loans. So this stage happens usually when we are having a quantitative easing, just like what happened after the pandemic 2020. So all of the central banks, they started with the phase of stimulus, or what is known as a quantitative easing, in order to support the economy. So the central banks control the money supply and credit creation through two important policies. The first one is the reserve requirements. So how much banks are required to deposit at the central bank? Well, this is one of the things that how central banks they do create the credit creation. Nonetheless, because the purpose of the central bank is indeed to support these banks and indeed to support the economy, but nonetheless they do have some policies in order to control that. The second one is, which is the discount rate. It's the interest rate at which the central bank lends the funds to any bank. So moving or making it floating discount rates. This is what keeps one of the things that keeps the credit creation under control. So the monetary policy, that's one of the biggest things that is using the quantitative easing, which I was speaking about, and the interest rate policy, which is happening at the moment. So now at the moment, we should do that's again one of the things that we should be aware of. So the interest rate policy, now every time that we are having a Fed meeting, we are expecting, is the Fed is going to increase the interest rates by 50 basis points, 75 basis points, or 100 basis points. So the point is here is just to keep an eye based on Jeremy Powell, which is he's the head, the chief. So he said we will keep tracking the interest rates based on the economic data. And based on the economic data, of course, he is referring to the inflation ones. Inflation and the employment, of course, data. But as for the inflation, if the inflation, it's as simple as this. If the inflation is going down, then this is how the data is being priced in the market. The inflation is going down, then the market will price in that the Fed might be increasing the interest rate by less than is expected. So now the most recent one came by 8.2, more than the expectations that was at 8.1. So what do you think? the Fed will stop here and not keep increasing the interest rates. Well, no, this is not what the markets are pricing in. Pricing in a continuation of increasing the interest rates. So again, that's one of the things that we should be understanding, keep tracking in order to have a safe trading journey. This is the fiscal policy when it comes to the government, the tax and government spending. And as for the lack of time, just let's go for exactly the types of fiscal policy. So when we do have a neutral fiscal policy, we have an expansionary and contractionary. So the neutral fiscal policy, it's the balance between collecting taxes and public spending balanced budget. So basically this is the fiscal policies are made by, are made just to control, just to keep the economy under control in order to control the different kind of factors that including the interest rates, including the inflation and so on. So the expansion is when we spending more money than is being collected and financing this with borrowing stimulus the economy. This is exactly what we were saying at the beginning, which is the revenue, the taxes minus the expenditure. And the last one would be, it will be collecting more in taxes than is spent to slow down an overheating economy. This is how the, this is the policy when we are trying to calm down any overheating economy. So inflations, which is the last thing I'm going to speak about, inflations is all different kind. So we do keep hearing that we are having a high inflation, we are having a deflation, we are disinflation. But in order for you to understand what is there, in order for you to determine in which trading behavior or trading strategies I am going to have, you should at least be able to determine at which stage we are at. So in the inflation, we know all what is the inflation. It's the increase in the prices of goods and services over a certain time. And, it's more complicated about this, but this is exactly, what is enough to be understanding about inflation. So as for the disinflation, it's the reduced in, which is might be happening at the moment. It's reduced in inflation, but it's a very temporary. So it's not for a long time. It's increased. Not yet a recession, but it's a decrease in the inflation. Stagflation is the combination of both, We are having a high levels of inflation, but at the same time, we are having a slow in the growth of the economy or the GDP. So how to survive? Well, this is what I do believe. We should, understand at all time what is happening in the market, adopt based on what is happening, based on what we are having in the market. We should adopt and manage risk at all time. That's definitely one of the most important things. And the self-control, which is not to be stubborn with the market and not to be, stubborn with what the point of view I do have. So if we do have, let's say, a deflation in the market or a disinflation or an inflation, then I should be adopting, understanding, and managing my risks based on that. And that's pretty much everything from my side. I do hope that it was useful for you, and I would be delighted to have any of your questions. Thanks a lot.